Hello everyone, welcome to my channel Money Step. This is John speaking. Today's topic is about the QE is going to end soon. Let's go through the disclaimer. The video recording is a learning progress for my own self. Viewers should not taking it as a buying or selling call for the stocks or investment. Okay. So first we need to go through the balance sheets for the Federal Reserve and the S&P 500. They are both correlated moving up trends. When it's moving up for the balance sheets, the S&P is moving up as well. How to make the balance sheets moving up? So the Federal Reserve introducing QE back in 2008, November over here, and then November 2010, and then September 2012. So that's why the balance sheet is moving up. So the S&P 500 as well. So we can see that the balance sheet is stagnant and moving down back in 2015 onward until 2020. What happened? What happened to the balance sheets and the S&P 500, which spiking up so fast? Is because of the QE4. QE4. Why there was a QE4? Because of the circuit breakers happened in S&P 500 continuously 4 times back in 2020 March. So you can see that it hit the circuit breakers 4 times in March 2020. That's why Federal Reserve is triggering for the QE program 700 billions and cut the interest rate to 0. This is a big news. That's why the balance sheets and the S&P 500 moving up so fast and fierce. So recently in March 2020, finally the Federal Reserve is rising the interest rate in 25 basis points after 3 years. So and then they see they are going to continuously rising the interest rate ahead throughout the years of the 2020. There are remaining of 6 meetings. The next meeting will be in May of 2022. Yep. So this is the chart for the interest rate for the Federal Reserve. In case you didn't see the interest rate high, it would be at somewhere at the end of the chart. There's a tail right over there. So we can, through these pictures, we can see that the trending for the interest rate is dropping now from 1980 toward currently. So the trending is moving downwards for the interest rate. Yep. Recently, the inflation has rose to risen to the 7.9% in February because of the food energy price pushing highest in more than 40 years. So which means that 7.9% it never happened for the past 40 years. Okay, so which is very serious. 40 years. Let's have a look on the chartings for the inflations. This one is the chartings for the inflation chart in US. So we can see that 7.9% currently in February. So and past 40 years the highest was somewhere around 1980s, somewhere right there. So what happened recently in February 24th, the Russia invasions of Ukraine. So we can see that in February, end of February, Russia going into the Ukraine. So the next will be the crude oil price chart. So the Russia invading to the Ukraine will be somewhere around here. But the price for the crude oil price doesn't move much in February. So it's starting to trigger highest in the first March. The crude oil price jumping above $100 a barrel. So you can see that all throughout the months of the March, the price is definitely higher comparing to the February. So which means that the high oil price haven't pricing in to the CPI in February. So what are we going to expect for the CPI in March or April? there is no Federal Reserve meetings in between. So until the May 2022. So we should expecting a higher inflations in March, maybe in April as well. So it's been 40 years they did never see this type of CPI price rising inflations. So over here you can see that 1980 the CPI is crazy high. But how the Federal Reserve bring down the inflations after 1980? How they make it? How they make it? And they make it all the way they bring down the CPI inflation below 3%, you know. So and then the afterward the inflation is moving sideways all the way after 40 years. Wow, it's brilliant job, you know. It's brilliant jobs over there. It's superb. So this news is about the Powell. Powell admires Paul Volcker. Okay, so Powell is the chairman of Federal Reserve at this moment. So who is the Paul Volcker? Who the hell is Paul Volcker? Okay, let's have a look. You can try to Google Volcker inflations. So you'll come out with a result that in August 1979, Paul Volcker became the chairman of Federal Reserve, and the annual average inflation rate in US was 9%. So let's dig deeper into Wikipedia's. So on the right side, this is the guy for the Paul Volcker and what he did. Okay, this one is the inflation. Inflation's peaked at 14.8% back in March 1980. So you can check back the charts later on. I'll show you the chart later on. So this was the inflation's rising crazy high 1918. So it bring down to 3% in 1983 because the Federal Reserve Board led by the workers rising the interest rate to a peak of 20% in June 1981. 20%, can you imagine 20% interest rate? How much you need to pay for the mortgage, personal loan, all those things? It's going to bring down a lot. Your costing will be very, very high. I believe only the baby boomers, maybe Gen X can experience. No, baby boomer experience it a lot. Okay. So back to this inflation chart, we put in the interest rate as well. So on the left is inflation, on the right is interest rate by the Federal Reserve. So these two is pretty much correlated. So how to bring down the inflation? The Federal Reserve has to bring up the interest rate to kill the inflation. We need to kill the inflations because it's too high before it's too late become a hyperinflation. Okay, so the choice for the Federal Reserve is, I would say, that's the only solution to bring down inflation. So we look at this chart again. This one is the interest rate for the Federal Reserve. So to bring down the inflation, they need to bring up the interest rate. So how high was it? It has to be above the inflation rate, as per what it done by the workers back in 1980. So the inflation was about 14%, near to 15%, but the Fed bring up the interest rate far higher, 20%, to bring down the inflations. So this chart and the inflation charts are very important. So I believe Federal Reserve is going to recycle the same method as per this chart. They are going to recycling it. Hear my voice. They are going to recycling it. So which means that they are going to rise interest rate higher than your expectation. So thereafter they can recycling all these things. We are going to have another cycles of lower low, lower high trending of the interest rate chart. So is the QE going to die? I don't have any answer at this moment. I don't have any answer. So until the I believe until the inflation cool down to a low level, maybe below 4%. So to trigger back sentiment stimulus into the markets, into the economics, maybe they will come back again. I don't know. But have you ever seen drug addicted get rid of their drugs very soon? I have no answer. I have no answer. So we will see what happens next after the Federal Reserve rising the interest rate to pretty much high level. So you need to get ready what is going to happen when the interest rate continuously rising sooner, end of the years. I believe we will see something very volatile in these 2 years. So are you prepared for it? We'll see. See you next time. Goodbye.